Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with TA Tuesday. And holy smokes, what a Tuesday it's been. A little different this week than last week. We're going to dive in here in just a moment. But first, remember, none of this is financial, legal, tax, investment advice. This is your buddy Gary showing you more about the charts, helping you increase your financial literacy to help set you and your family on the path to financial freedom. So with no further ado, let's jump right into the charts. So we're going to go ahead and start right out here with the Bitcoin chart. And holy smokes, the floor that's been the floor for the past several months now, last 4 months, doesn't seem to be the floor anymore. We dropped below that, and you'll notice right here, we did drop below this 91,500 level that we've been basically trading in for a while now. You'll also note that we found support kind of near this 89.2 Fibonacci level. It's a 78.6 fib level. This is a long-term fib. I'm going all the way from the 2022 low at the end of 2022 to the more recent all-time high here in 2025. Those are the two Fibonacci points that I'm using. I look at long-term fib levels. I look at it over the course of the yearly cycles, not necessarily what's going on every day, every week, every month. So I hope that helps set that for you guys. Let's go ahead and modify this channel real quick. So if I would, let me get rid of those. We're going to modify this linear regression channel a little bit. We're going to make it a slightly longer length here. What that does is that gets us up to where we've really started this downward trend. So it's going to be about 220. And what you'll see is that's from where we started this downward trend. This is the channel that we've been relatively respecting. We did dip out of it once back here on February 2nd. We have also dipped out of it here most recently yesterday and today, Tuesday, the 25th of February. Had to think about that. We are significantly mean reverted to the downside. The last time we were this mean reverted to the downside, if we put a number on that, the number is minus 3.19 standard deviations to the downside. If I put my crosshairs there and I look left, the only thing that even came close was the Japanese yen carry trade unwind. Then you'd have to go all the way back here to the 1st of May, 2024. So all of these very pronounced dips that you see in the price and the upper bands here are well reflected in the mean reversion tool. We've got an RSI reading that's below 21 right now. MACD is down. Crazy thing is that global liquidity is slightly up. That's what's measured by the bottom yellow line right here. So what does all of this tell us? The other thing I want to put on here on this chart is the VRVP. So you can see that basically there's a gap. You hear a lot of people talking about an air gap. What they mean is from about where that pink line is here to this pink line here. Notice very, very, very little Bitcoin exchanged hands in between those two levels. So between the, call it $87,000 level and down to the $77,000 level, there's a $10,000 air gap right here where there wasn't very many shares that were actually traded. That's because of this incredible impulsive move where we shot right up. We shot from 77 to 87 basically overnight within a week, not even a week, within a few days. And there wasn't much time for shares to exchange hands where I just colored in pink right there. And that correlates with this area over on the right-hand side of the graph. So keep that part in mind that there is that air gap there. If let's put that back on and let's take a look at what's our next level down. So we're currently right just below this light blue line right here. There's not a whole lot else to catch us. Maybe this $85,000 level, a little bit of volume right there. Then the next thing down is the 200-day moving average. 200-day moving average is currently sitting at 81,627, 81,627. So could that be the next level down? I've heard people saying yes, that it could be. So prepare yourself for that. How big of a drawdown would that be from the all-time high? So from the all-time high here down to that 200-day moving average is just under 26% drawdown. 25 to 30% drawdowns in a bull market, those typically happen. They happen 2, 3, 4, 5 times during a bull market, we see those pullbacks of up to 30%. So that would not be out of the question, may not be what you want to hear, but this is time to be the realist and not time to be the sugarcoater when it's all said and done. So that's what I see with Bitcoin. What do we need to do to the upside? Well, we need to regain this 91.5 level that seemed to be the floor for the longest time. So we've got to get back up over 91.5 and get back up here towards where the other moving averages are. The 50 and the 100 are right around $98,000, $99,000. The other thing I wanted to show is I wanted to show the longer term linear regression channel, which is going to be this one up here. It's going to take it a second to fire in, but what you'll see is that we've been basically trading in a channel with Bitcoin. Now it's going to make a liar of me. Give me one moment. Here it comes. There's the channel. So you see this red channel right here, these red lines that are bordering it. We are now right around, dancing around the midline of the channel. When I say dancing around, I'm not talking about the short-term one. I'm talking about this long-term one. See, there's a green line bisecting the red lines that you see here. This is a channel that we've been in over the last 2 years, really. And we are still respecting the midline of that channel. That's a solid sign. If we drop down into the lower part of the channel, now we're going back and testing the 200-day moving average and potentially even the 61.8 fib level, which is all the way down here at about $75,000. The likelihood of that is very low, but the likelihood of making our way all the way down to the 200-day moving average is certainly a possibility. So let's move on. I'm probably not going to spend as much time on the others. Solana just had its teeth kicked in. I mean, there's no other way to say it. It is down in the under 140. And if you remember from last week's TA Tuesday, I said that 61.8 looked like it was holding up pretty strong and that we needed to regain that level. It may act as resistance. Well, it sure did. The 200-day moving average and the 61.8 fib level, if we zoom way into that point right here, notice we almost made it back up to that level, and that's what we rejected off of and then dropped. We didn't even support on the 50% fib level. We just blasted right through it and dropped down to the bottom edge of this channel that we've been trading in, this short-term linear regression channel. We are significantly mean reverted to the downside, but not the most that we've ever been, meaning suggesting that it could potentially even go lower. And the RSI value is way, way low. It hit a low of 15.52. That's definitely one of the lowest RSI values that we've seen in years, not even months. If I put a crosshairs on that and we look to the left, nothing even came close. Not even the Japanese yen carry trade unwind. It didn't get down as far as it's gone down today, yesterday and today, the RSI value. So a lot of the gains that we had gotten, everything that we had gotten since the election is gone. We were right around 160 when the election occurred back in November of last year. We gave all of that back and then some, because now we're down here. We've hit a low of around 130. What did it go down to? 131, if I remember correctly. Yeah, 133, 131.89. So call it 132. We've been to a low of 132. It says it over here on the right-hand side of the chart. What's the next level down? Well, there is a fib level down at 117, 118. This yellow line that we see here, that also was where we were consolidating before. You notice we bounced off that level multiple times back in the summer and fall of last year of 2024. So could we go back and retest those levels? We'll see, but we're certainly not very far away right now. Back to the upside, we've got to break the 151 level, gain support on it again. We then would have to break out of this short-term channel that you see and regain the 61.8 and the 200-day moving average. Again, right now, we've been under the 200-day moving average for a good couple of weeks now. So that's not a very bullish sign for Solana. MicroStrategy, let's jump in over there. Well, there's the gap up that I had put in back here in November. So coming out of the election, from a Friday to a Monday, because Bitcoin had moved so much over the weekend, MicroStrategy gapped up on Monday morning. What does that mean? It means that the price jumped from the closing value of around 270, if I remember correctly, and it opened at 300. No shares traded in between those two. Sorry, coffee break. I forgot I had poured the coffee. So we almost filled that gap back here at the end of the year last year. We got halfway down through the gap, but never refilled it. Refilling it meaning trading all the way down to where that last closing value was. So imagine we close here, we open here, there's a gap in between, and we filled half of that, okay? And recently, we just filled the rest of the gap. We traded all the way straight down through the gap, and we are now, we've exchanged some shares on either side of it all the way through it. So gap is filled. Again, not looking insanely promising, though, at the moment for MicroStrategy. The short term, we're in this short term, like almost consolidation, sideways, slowly down channel that we've been in. We're bouncing right around that 50% fib level, which was what we talked about last week. We said it could go down as low as the 100-day moving average, which was at around 315. Then we said, I think it was 310 last week. And then we said it could go down as low as the 50% fib level, which is at 280. The bottom part of the channel, which we're respecting right now, is right around 265. Next step would be the 200-day moving average. And the 200-day moving average, if I put a value on that, is currently at 229.38. So call it 230, just below 230 is the next major level of support down. We can also put that VRVP on here and see that there's a bit of an air gap right here. This is that air gap that we talked about before. There were no shares traded there. Now there's a handful of shares that are traded there, and that's this V shape that you see here. A lot of shares exchanged hands right here, right where I'm coloring it in pink. There's also, you can see the profile kind of juts out like that. There's shares down here. But in between these two is an air gap, just like there was on Bitcoin, there is on MicroStrategy, and that gap is filling. We should, and again, technical analysis is never 100%, support down here on this 255, 260 level if we drop down that low. And then to the upside, what do we have to the upside? Well, we've got to regain this 50% fib level at 280, then make our way back up to the midpoint of this channel that's down, this downward sloping channel, along with the 100-day moving average. That's right around 315, 310, 315, and then regain the 61.8 fib level, which is 340. So we've got work to do to make our way back to the upside. Again, guys, remember, I don't want to sound like a Debbie Downer. Risk happens fast. It could come on like that. In no time, they could be right back up to these levels. Quick wick down, pop right back up, flush out the leverage in the Bitcoin market, which, of course, MicroStrategy is a proxy of Bitcoin, so it's going to do what Bitcoin does. Keep that in mind. It can happen very fast. The last thing you want to do is be caught out thinking, well, I'll wait for it to go all the way down to 200, and it never makes its way down there. Last but not least is Tesla. Tesla looks like a somewhat similar chart to what we were just looking at with MicroStrategy. I am going to increase the length of this channel a little bit so that we can include from where it dropped from the all-time high down. And we've been respecting this channel very well as the same. It's crazy how these things work so well with a linear regression channel. You'll notice we respected the top, the bottom of the channel, top of the channel, top of the channel. Made our way along the midline of the channel quite a bit here and the bottom of the channel. Do we retest the bottom of the channel again right now? That stands to be seen. So what level is that at? That level right now, if we got there within the next, it's right around between 300 and 305 would be the bottom edge of this channel. We also have the 50% fib level down here at 295 that we've been talking about for a while. We were talking about it here when we dipped below the 100-day moving average, which is the red line going across the screen, and we were significantly mean reverted to the downside, and we had a buy signal. Everything lined up there that was a solid buy area, right around that 340, 350 level. So what happened? Well, we made our way back up to where you see this yellow line going across, which has been this significant resistance area. I drew that line in there. It's at around 363. You notice that we hit it, and it was resistance back on November 12th. It was resistance again on November 25th, resistance again on December 2nd. almost acted as support here on January 2nd. We didn't quite make it down that far. We supported on it here on February the 6th, then dropped below it. Now it's become resistance Friday the 14th, and again here on the 19th and 20th of February. So what does all that tell us? Well, from a technical standpoint, we are mean reverted slightly to the downside, but not significantly oversold. RSI is not even below 30 right now, so there's still a little bit more room that we could go down because of the weakness in the market. What would be the next stop down? 305-ish on the bottom part of the channel. Next one down would be the 50% fib level at 295, followed by the 200-day moving average, which is at about 277 right now. I don't see us going that low in the immediate future. I think there's enough of a bid that it would get bid up. Anything at 300 or thereabouts, 295, 300 would get bid up, meaning people would start buying up shares at that point. To the upside, we've got to break through this 363 level. It's that simple. Sure, we've got to reclaim the 61.8 fib level at 340, but then we've got to bust through this 360 that was historically resistance, then became support, and has now become resistance again. So thanks for tuning in today, guys. I know it wasn't exactly the most joyous of occasions today, right? The charts are ugly. They're just ugly right now. We've definitely had a pullback, but it's good for you to see the good times when things were going kind of nuts in the charts, as well as the bad times right now where we're seeing weakness and what could be the bottom, what could be points of entry. All those times I said it could go down this far, those could be solid points of entry. Same thing, I was talking about resistances to the upside. Those may be take profit zones. So if you took an entry, let's say in Solana at 130 and you take an exit up at 150, 160, that's still a 30-point gain on that asset in a short period of time. So keep that in mind. Book a class, book a course with me at G Dinero Coaching. I go over technical analysis. I go over understanding options to help you with both of those. Make sure you like this video. Make sure you comment below. Let me know what you like best about it, what you see that I may not have seen in the charts, and subscribe so that you get more videos just like this. And remember, this is all about you increasing your financial literacy. So here's to you increasing your financial literacy so that you can help set you and your family on that path to financial freedom. Take care. G Dinero out. We'll see you on the next time. See ya.